Some great price action. Crude oil having a good day on the back of these stock market gains. How do you tie it all together? Well, I got just a guy. Let's bring him in, Mr. Oliver Slope. Oliver from Blue Line Futures. I know you love talking outside markets, so we could talk grains. We could talk about whatever you want. This is your time, my friend. Good to see you.
Good to see you too. Yeah, well, you mentioned the precious metals, and man, they have been on a roller coaster really since the release of the Federal Reserve's decision yesterday. Silver trading in about $1.50 range overnight, and gold in a $50 range, and it's still an inside day, which means we're still stuck in between yesterday's trading range. So a lot of volatility in the outside markets, and unfortunately, we aren't seeing that really spill over to much momentum in the grain markets as we're just kind of chopping around here as we try to carve out a little bit of a seasonal low and a harvest low. For the corn market, that typically takes place between now and the first week of October, and also between now and then we do have a quarterly stocks report that's going to be on Monday, September 30th. And I was looking back at some history facts over the last 10 years. That report has been such a coin flip. We've seen 5 positive closes and 5 lower closes on the back of that report over the last 10 years. So a lot of uncertainty into that. We're looking at the options market really closely. Volatility's at its lowest level since the spring, so that means volatility's low. Options are relatively cheap. It might be a good way to get some risk on or manage risk, or just express an outright opinion in the market.
Yeah, I like that, Oliver. You know, the cash markets are weak, so when you look at the basis, a lot of that old crop hit the farmer's big hope where the funds are really short. And as you and I know, they're covering a little bit every week, but they're covering right into the farmer selling that old crop, aren't they?
That's exactly right. I mean, for the funds covering as many short position corn market as they did, you'd think we would have had a much more meaningful rally, but corn only managed to rally about 25 cents off of those lows, and you hit the nail on the head. A lot of that was producer selling. I think the thing that makes me a little bit nervous, further down the timeline is the fact that now funds have trimmed their net short position almost in half, so they do have powder to add unless we get a real friendly catalyst to kind of get them out of additional short positions going forward. What could those catalysts be? Well, once we get through harvest here in the States, that attention turns to South America. It looks a little bit hot and dry right now, but that's not such a bad thing for this time of year down there. As planting when it's a little bit drier can be beneficial to yields further down the timeline.
Yeah, I'll tell you a real quick story. Maybe you've heard similar stories. I had a farmer call me from Northwest Indiana yesterday as I was driving to Nashville. He said, the bean crop's not going to be there. And I said, well, what are your yields? And he said, I don't know. We haven't started harvesting yet. But he went in the combine, called me back. He said, okay, a little less drama, 80 bushel beans. It dried down quick. Is that the bull's big hope here in the States, that it dried down too quickly?
That was a big concern, but we saw it even worse last year, right? We got the massive heat wave, 115-degree heat index through the middle of August last year, and things turned out pretty darn well. I don't know that I'd be holding out hope for a significant weather rally this late in the year. I think the market's done a pretty good job at pricing things in with where we're at right now, and now we're staring at Brazil, who is expected to have a big crop coming down the pipeline as well. Obviously, Mother Nature can have a big say in that, so that's going to be where all the attention's at going forward.
Sounds good, Oliver. You stay right there. We're going to go for a commercial break. Try to keep these lights on here. Then we're going to come back and talk cattle and what we're seeing there when it comes to that. Let's bring him back in, Mr. Oliver Slope, Blue Line Futures. Oliver, I know you have something smart to tell us about meats. Show everyone your talent, sir.
Well, yesterday the cattle market was on pause as things were just closing down when the Federal Reserve came out with their decision and the press conference following that. And we got the risk on trade in the outside markets today, and that was kind of the coast is clear button for the cattle market, and a market where the funds have really been uninvolved. They're net short feeder cattle and relatively neutral live cattle with a net long position, around 40,000 futures and options contracts. On top of that, the technicals and seasonals look pretty friendly, too. We had a double bottom from the August 21st lows and September 9th lows. And now that we got the green light from the outside markets, we're rallying back, seeing some more participation. But we do have a cattle on feed report tomorrow. So I don't know that we're going to necessarily see this cash market break out just yet ahead of that. But if the cattle on feed report is friendly to bullish, maybe that cash market is able to break out. We can get some serious follow through to the upside.
I like your thoughts. Oliver Slope coming to you from Blue Line Futures from Chicago. Thanks, my friend. I hand it back to